the markets experienced their worst day since 2022, with tech stocks leading the decline. The S&P 500 and Nasdaq Composite suffered significant losses, driven by disappointing earnings reports from tech giants and weak economic data. Investors are left wondering if this is a temporary blip or a sign of a deeper correction. The market's fear and uncertainty are palpable. The Dow Jones Industrial Average also fell, though not as sharply. The Russell 2000, which tracks small-cap stocks, managed to post a small gain. This divergence in performance suggests that investors are becoming more selective and potentially seeking refuge in smaller companies. This sell-off serves as a stark reminder that the market is not invincible. Even after a strong start to the year, fueled by optimism about artificial intelligence and a potential pause in interest rate hikes, the market remains vulnerable to negative news. Alphabet, the parent company of Google, saw its stock price plummet after its earnings report missed analysts' expectations. The company's revenue growth slowed, particularly in its core advertising business. This slowdown raised concerns about the impact of competition and a potential economic slowdown on Alphabet's future earnings. Tesla, the electric vehicle maker, also faced a backlash from investors after its CEO, Elon Musk, announced plans to further cut prices. While price cuts can stimulate demand, they also put pressure on profit margins. Investors are worried that Tesla's profitability might be at risk as it faces increasing competition in the electric vehicle market. Both Alphabet and Tesla are bellwethers for the tech industry and the broader economy. Their disappointing results cast a shadow over the market and fueled fears of a potential economic downturn. Investors are left wondering if these tech giants are losing their edge. The negative sentiment surrounding Alphabet and Tesla quickly spread to other major tech stocks. Nvidia, the chipmaker that has been a major beneficiary of the AI boom, saw its stock price fall sharply. Investors are concerned that the demand for AI chips might not be as strong as initially anticipated. Meta, the parent company of Facebook, also experienced a decline in its stock price. The social media giant continues to grapple with challenges related to user growth, privacy concerns, and competition from TikTok. Investors are losing patience with Meta's ability to overcome these hurdles. Microsoft, which has been a relative outperformer in the tech sector, was not immune to the sell-off. Even though the software giant recently reported strong earnings, investors are concerned that its cloud computing business, Azure, might face slower growth in the coming quarters. Section 4. Market Bloodbath. Numbers tell the story. The magnitude of the market decline was staggering. The Nasdaq Composite, which is heavily weighted towards tech stocks, plunged by 3.8%, marking its worst day since February 2022. The S&P 500, a broader measure of the U.S. stock market, tumbled by 2.5%, also its worst performance in over a year. The Dow Jones Industrial Average, which includes more industrial and financial companies, fell by 1.8%. The Russell 2000, which tracks smaller companies, was the only major index to close in positive territory, edging up by 0.3%. These numbers highlight the depth of the market's pessimism. The sell-off was broad-based, affecting nearly all sectors of the market. Investors are clearly concerned about the outlook for the economy and corporate profits. Section 5. Expert Analysis, a correction or a warning. Ross Mayfield, an investment strategist at Baird, commented on the market's condition, stating, "This is a classic case of the market getting ahead of itself." He believes that the sell-off is a healthy correction after a strong start to the year. Mayfield argues that the underlying fundamentals of the economy remain solid, with low unemployment and strong consumer spending. However, other analysts are more cautious. They point to the disappointing economic data and the potential for further interest rate hikes by the Federal Reserve as reasons for concern. They argue that the market may be entering a period of heightened volatility. The divergence of opinions among experts reflects the uncertainty surrounding the market's direction. Only time will tell whether this sell-off is a temporary blip or a sign of more trouble ahead. Section 6. A Glimmer of Hope. Despite the overall market gloom, there are some glimmers of hope. The strong performance of small-cap stocks suggests that investors are still willing to put money to work in areas where they see value. Additionally, the overall earnings season has started strong. with many S&P 500 companies surpassing earnings expectations. However, these positive factors are being overshadowed by the disappointing economic data. The PMI Flash Manufacturing Output Index fell to its lowest level in 3 months, indicating a slowdown in the manufacturing sector. Furthermore, new home sales declined more than expected, raising concerns about the health of the housing market. The conflicting signals from the market and the economy make it difficult to predict the future direction of the market. Investors should proceed with caution and focus on companies with strong fundamentals and a proven track record of profitability.